What's going on, guys, and welcome back to another video. So everywhere it seems that you're looking over the last few days, there is news of a potential stock market crash on the horizon. So today I thought it would be a good idea to address this issue, and we're going to kind of go through the reasonings why there may be a potential crash on the horizon and my plans going forward in my dividend/growth stock portfolios, crypto, real estate, etc. So with all that being said, let's get straight on into today's video. Now, as today's video is kind of mainly addressed around my strategy going forward for this potential crash, I do want to give an overall brief summary of why there might be a potential crash as well. And the Motley Fool makes 7 very valid points, everything ranging from overvaluations. Now, we know if you started investing over the last few years, there's certainly the potential for a lot of these stocks to be extremely overvalued because of this bull run over the last few years. So again, the bubble must burst at some stage. Again, markets are very cyclical. They have to go up as well as down over time. And if you're a long-term investor, you need to be able to control your emotion here and definitely take advantage on the dips and kind of ride it out as such as well. Kind of ride out the good times, and when it dips, dollar cost average. Going forward, certainly that is going to be the case, and that was always the case for me for stocks that were in the red. I was always dollar cost average down. Over the long term will definitely pay off. Now there's many other factors as well. As you know, stock market is a very complex beast overall. So everything ranging from further lockdowns, quantitative easing wind down as well, overvaluations, everything from inflation, etc., etc. There's so many different reasons why there could be a potential crash on the horizon. Now, saying that as well, a lot of these kind of hype and fear news sells, so that's why a lot of these outlets, even on YouTube as well, they really kind of do exaggerate a lot of these potential crashes because they do get views and they do sell newspapers, etc. But again, in my own personal opinion, which we'll address in today's video, I don't really believe there's any reason to panic, because if you're a long-term investor, you have to realize that there will be crashes within that portfolio. As an example here as well, before we look at my portfolios, the kind of exaggeration you can see in a lot of these articles, because again, fear and hype does sell. So we can see here they're saying that there's 90% of the stock market could be wiped out this year, which in my own personal opinion is extremely unrealistic and very, very unlikely. But again, saying that there probably will be a bit of a downturn, although it will not be 90% in my own opinion. But again, there has to be downturns as well as uptrends because markets are cyclical, as mentioned earlier. And it's how you kind of take advantage of these dips is really what makes the difference in your portfolio long term. But again, the only thing I do agree with this article is that at the bottom there, they're saying that there's huge buying opportunities going forward. So today, we're actually going to discuss that in my own portfolio. So in terms of my own investments, we can see here on screen, we have about 8 overall that we're tracking in my operation 0 to 1 million euro net worth 5-year plan. Again, if you haven't seen those videos, I'll link them in the description below. But again, my investment vehicles range from real estate to growth stocks, dividend portfolio, ETFs, and crypto. Now, a lot of these are at the complete infant stage here. As you can see, we have very small amounts of capital in here at the moment, which is probably actually a good thing that we only started only a few weeks ago, because the markets are falling across the board, which we'll look at my portfolios briefly in a few seconds to see how this overall potential crash is affecting the portfolio. But saying that, it gives great opportunities to dollar cost average because I have very little capital in here. For example, in crypto, we only have 50 euro as we just opened the account a few days back. But again, we can see over the last few weeks that Bitcoin in particular, and all other crypto assets as well, are starting to drop. But again, it's going to be very easy to dollar cost average into my investment, which we'll actually have a look at now in a few seconds. So let's briefly look through all of my portfolios across different brokerages to go through my plans going forward for this potential crash and beyond. Firstly, let's discuss real estate very briefly. Now again, in my prior videos we went through this in a bit more detail, but we can see on screen the current property being built. Now it'll be completely BAU for this, as again, the overall stock market won't actually affect this build because again, we'll be actually living here, so the valuation actually doesn't make a difference here. But again, this is where we're at the moment, and I do want to set a target of 120,000 euro of our own personal cash within this property before the end of the year, which again is pretty realistic considering we have most of this capital already in savings accounts. But for now, we're kind of on track for this property, and there's not really much else to report here, so we're kind of keeping this side of the investment brief. And once we have any updates in terms of the build and additional deposits paid from our own capital, we will give you updates there. But for now, that's where we're at with real estate, and we can have a look at our stock, growth, and dividend portfolios next. Here we are on trading 2 with my dividend portfolio, which only started just before Christmas and about €614 at the moment here, again, which is miles away from where we actually want this portfolio, but over time, dollar cost averaging and slowly trickle feeding funds in here, it will definitely pay off over the long term. Now, again, what I find very interesting here is that all stocks react differently to different market conditions in terms of, let's say, dividend in comparison to growth stocks. So here we're currently up about 3.5%. Now, if this was all in growth stocks, actually we'll see that in a few seconds anyway, on Etoro with my growth portfolio, it's actually in the red in comparison to dividends, which are in the green. So on this portfolio, I have 50 stocks overall spread across all 11 sectors. We won't go into detail in this today because we did in the last video. If you'd like to see that, it's in the description below as well. But again, today, one of the main reasons why I have 50 stocks here is to take advantage of dollar cost averaging and to take advantage of these current situations with a lot of people panic selling, etc., which might drop a lot of these stocks short term. So I will be putting a lot more capital in here over the coming weeks and slowly taking advantage as stocks drop. Now, again, I'm under no illusion here that there is a potential of a longer kind of bear market coming up, so I won't be putting all of my eggs into one basket, so to speak, either. Again, if I put €1,000, let's say, of free cash in here over the next few weeks, I won't be investing all 1,000 at once because, again, the markets can continue to drop. So let's say I'll probably put in 10% of the cash I put in here over the next few weeks, and then after a few weeks after that, if they drop further, well and good, I'll start trickle feeding more of that free funds in. But if they go back up in value, that's fine as well. Again, it's a win-win either way because I'll just leave the cash there sitting on the sideline, as patience is key, and just wait for the markets to drop again, because like long-term investors, it is inevitable that markets will go up as well as down. But I'm kind of happy enough at the moment with this dividend portfolio, considering it's up 3.5%. But saying that as well, I wouldn't mind if it did drop because we have very little capital here, so it'd be very easy to dollar cost average down my overall average costs within each of these 50 stocks. But again, I'm quite happy where we're at the moment, and we'll kind of keep you updated here over the next few weeks if it continues in the green or if the overall market downtrend will bring this into the red. Another portfolio we kicked off only a few days back was my growth portfolio on Etoro. Now, as mentioned a few seconds ago, we have 50 stocks overall in my dividend portfolio, but for my growth portfolio, I only want to have 10 max. At the moment, we can see on screen we currently have 5, mainly kind of tech orientated here, in the form of Apple, Amazon, Facebook or Meta platforms. We have Google, Alpha Class A and Tesla as well. Again, we can notice here that there's a bit of a difference, although we only have about $90 allocated at the moment and $21 free funds. We're down about $3 overall, which again is absolutely peanuts, I know, but it just goes to show the interesting fact that we can see here they're all in the red. So, example, Tesla is down 5.5%, Google is down 3.95%, and the rest are down between 2 and 3% as well, which is very interesting to see. But definitely going forward, we're going to take advantage here over the next few weeks, dollar cost average down. Again, just like my dividend portfolio, we won't be throwing all our cash in at once because there is quite easily, very likely option of these going down even further. But as well as mentioned, I want 5 more growth stocks. Over the last few evenings, I have been looking at some, but again, I haven't really made up my mind because I have it down to about 10, so obviously I only can have 5 more, but I have it down to about 10 potential options. Again, a lot of these are kind of tech orientated, but I don't want to have all 10 stocks within the tech industry, as well as different sectors will react differently to different market conditions. But again, probably at the start or the middle of next week, I will be buying very small amounts of capital. You can see here we only have about $10 to $20 in each of these at the moment. So I will probably only do the exact same with the other 5, and over time we will slowly drip feed in when they drop into the red. But for now we have 5 all in the red, which actually is quite nice to see because it'll be easy dollar cost average, and I'm going to be buying 5 brand new stocks over next week, and when we do so, I'll keep you updated here as well. In terms of my crypto portfolio, again, this is in its complete infant stage, and for some reason I can't log on to Coinbase on my web platform, but I have the app on my phone. But for now, this CoinDesk will do. At the moment, Bitcoin is trading at about $42,156. Now, again, if you kept up to date with any cryptocurrency over the last few weeks, just like stocks, they have been in a bit of a downtrend as well, and with crypto in particular, it's extremely volatile. But again, we only have €50 in here at the moment, which again is absolute peanuts, I know. But going forward, I will be looking to increase this overall allocation. This year, as we saw at the very beginning on my spreadsheet, that I want to have about €1,000 allocated to crypto going forward, probably about 90% in Bitcoin and maybe 10% in Ethereum, or maybe we'll just keep the 100 to Bitcoin. We'll see as time progresses and I start to gain more knowledge within the crypto market. But again, for now, we have a tiny amount of capital here, and to be honest, I'll probably just put another €50 to double my investment. this week if the markets continue to fall to get my overall average cost down. But for now, I'm quite happy where we're at with this crypto allocation. My final portfolio, we actually haven't started yet, is on DeGiro, which we'll be using for the S&P 500 ETF solely here. Now, the reason I haven't really started this portfolio yet is mainly because I believe there's better options elsewhere in terms of the dividend and growth portfolios, and even crypto as well going forward. Because of the overall market dip, I believe my cash will be better suited there at this moment in time. Once the kind of markets do settle down a bit, I will start to invest a bit into these ETFs, buy a few of those at the start just to kick it off. Again, it'll all be in the S&P 500, but again, I believe my cash is better suited elsewhere because I'll get better bang for my buck as such. But again, I'll kind of keep it that way for now. And as the markets do settle down, I will start to invest into these ETFs once they settle down. But again, we're going to just keep it as is for now and keep it at zero. I have the broker ready to go and set up, but we're going to kind of solely invest into my dividend, growth and crypto portfolio over the next week. So there you have it. That's pretty much my plan going forward over the next few weeks, mainly to dollar cost average and start to kind of fatten up a lot of these portfolios in terms of growth, dividends and crypto in particular. Probably not as much as crypto, but I do want to definitely get these two up and running a bit more and at least get them over the €1,000 mark here as well. We're probably about €400 away at the moment from dividends, and we have quite a bit away to go for the growth portfolio. But again, it's not about how fast you pump in the money. It's literally about consistency and patience, because that will really make the difference long term. So next week, I will be buying more. I will be setting the dollar cost average into any of the 50 investments in my dividend portfolio. And I'm going to buy the 5 new stocks in growth. Again, once we do that, probably the middle of next week, I'll give you an update on where we're at, what we bought in the growth portfolio, and what we dollar cost averaged in within dividends, and if I bought any more crypto. So thanks very much if you made it this far. I hope you enjoy your weekend, and I will see you all in the next video.